Hi, Chair Powell. Thank you so much for taking my question, doing this today. My question is a follow-up to what Brian just asked. What is your message to consumers out there who can no longer afford the basics due to this high inflation?
Well, that is, yes, indeed. I mean, as I just said, I think we do understand very much, and we very much take to heart that it's our obligation to restore price stability. And we've had price stability for a very long time, and maybe come to take it for granted. But now we see the pain. I'm old enough to remember what very high inflation was like, and we're strongly committed as a committee to not allowing this higher inflation to become entrenched, and to use our tools to bring inflation back down to more normal levels, which our target is 2% inflation. So we will do that, and I just would want people to understand that. But the way we do that is by raising interest rates and by shrinking our balance sheet, and so financial conditions will become, at the margin, less supportive of various kinds of economic activity. That will slow the economy, while also allowing the labor market to remain very strong. And the good news is the economy and the labor market are quite strong, and that means the economy, we think, can handle interest rate increases.
And as a quick follow-up to that, obviously the Federal Reserve walking this very complicated fine line, trying to avoid a recession. For the consumers out there who are worried about their jobs in a possible recession, what do you say to that?
Well, I say that our intention is to bring inflation back down to 2% while still sustaining a strong labor market, and that the economy is very strong. If you look at where forecasts are, people are forecasting growth that's strong within the context of U.S. potential economic output. And we expect that to continue. And to the extent the data come in different, then of course our policy will adapt. But we do believe that our policy is the appropriate one for this forecast, and we believe that we can bring down inflation. We believe that we can do so while sustaining a strong labor market. The labor market it's not strong in the ordinary sense of the word. We have not seen a labor market where there are 1.7 job openings for every unemployed person, or where if you add job openings to those who are employed, that's actually substantially a larger number than the size of the workforce, than the number of people who actually count themselves as in the workforce. So this is a situation where demand is higher than supply. And when that happens, prices go up. So we need to use our tools to move supply and demand back. And we don't think we need to do this alone. There will be other factors helping that happen. But we certainly are prepared to use our tools, and we will.
Shepard Smith here. Thanks for watching CNBC on YouTube.